In this video, we're going to look at Google or Alphabet Inc. being the parent company's stock price and the underlying business to see if it meets value investment criteria. We're going to look at some of the company's financial figures and do a calculation to see what the stock should be worth. Also, a quick legal disclaimer, I'm not a financial advisor and this should not be taken as financial advice. Please consider talking to a financial advisor before making investment decisions. To start, we want to look at the profit before tax and expenses. This will tell us the margin or percentage of money a company keeps before tax and expenses. 40% or more is desired here, very close to 40 is okay as well. Next, we want to look at the profit after tax and expenses. This is a measure of a company's net profitability and we're looking for 20% or higher. Next up is retained earnings. Here we want to see steady growth. If it's not growing steadily, then the money the company is earning is not consistent year on year and can be a result of volatility. Next is the return on equity. This is a measure of the profitability of a business in relation to the equity or money the company has. Generally, 15 to 20% is good, but it can vary between industries. Next, we want to see if the company can pay off its debt in less than 4 years. The shorter time to pay off the debt, the better. Next, we want to calculate the capital expenditure to income ratio. The lower the better, so less than 25% is great and less than 50% is acceptable here. Okay, for Google, they pass in all categories except for capital expenditure. Also, I want to set a goal of 100 subscribers by January 1st, 2022. If you can help me reach this, I would really appreciate it. And remember, subscribing is free and you can always unsubscribe in the future. Okay, we're going to calculate the intrinsic value of Google or Alphabet Inc.'s stock price using the EPS growth rate and PE ratio from Yahoo Finance. And for Google or Alphabet Inc., the financials look mostly good and they only fail in one category, being capital expenditure, and it's kind of close to the buy trigger being 2,256, so this could be worth keeping an eye on to see if the price drops a bit.